What's up, folks? I have been working for the last couple of weeks, if you've been following me, on building an Openclaw trading bot and scanner. And the question is, can I trade better than my own bot? And the answer so far has been yes, uh, resoundingly. But the work continues on making my bot trade better than I can manually so far. So hang on, we're going to update you on my progress. Also, I did a crazy thing. I actually went long MicroStrategy this week, if you can believe it. I'll tell you why and if I'm going to actually hold it for the long run. So hang on, let people filter in, and we'll be right back. All right. What's up, everybody? Happy Friday. And I'm back again with an update to my progress. So basically what I've been working on is a stock spike scanner. If you guys want to take a look at it, it is at mychartist.io. And what it looks for is 30-minute opening scans. This is something I've been trading for the last 6 years. And it's basically my bread and butter, we could say. And what I wanted to do was I wanted to program a scanner that, first of all, would replace what I've been doing manually, which is scanning every single morning for these opportunities. What it basically is, and I was actually showing this on the screen here. This happens to be uh, a bit of an outlier, but nevertheless was from the scan. It was on Dell. This was on February the 18th. Let's just remove this, right here and just look and see what it actually was. So this was essentially a spike is where in the opening bar, 9:30 in the morning, you have a quick movement in price, slam down, gets bought back up, back inside that range. That's what I'm scanning for. That's what I trade. And it's pretty easy to program that in and make it work. So, that is one of 4 that I discretionarily took, okay, from the scans, basically. And, let's see, Dell. Yeah, so Dell was this one that happened on 2/18, okay? You'll notice I have can't see that because of my face. There we go. Yeah. So You'll notice that I have yeah, this is something I added this week. I'm trying to do different tiers of, what is better statistically, what has a better expectancy. Diamond level. This is something that only 8% of trades represent. And so I basically then, in just 3 weeks, it's a small sample size, I compared it to my own results to see, okay, well, let's see, let me get the chit chat going. There we go. What's up, guys? What is the what's the difference? What are the difference in the four that I've taken, which have been Dollar General, Dell, AME, and Western Digital versus the fire ones that my scanner came up with? And I beat my own bot. I beat my own scanner basically in the four because I brought in the human element. And what's funny is I see a lot of people making these bots on Twitter where they tell it, here, bot, make money or I'm going to delete you. Basically, they threaten the bot with death, thinking that that's going to make the bot trade better. And I don't think they're having all that much luck. Maybe I'm wrong. Maybe I'm wrong. I just don't think they're having that much luck yet. So far, I'm able to beat my bot in my own system, which is good and kind of sucks because I want other people to have some kind of use out of it. But I'm going to continue working on it, actually. What's up, Toby? What's my overall take on QQQ? It feels like we're going to be a down year. Well, I think you got to always kind of feel. We'll look at some market updates here in a second. You need to always presume the stock market is going to go up because most of the time it does. But that doesn't mean that it won't this year. My favorite quote is this, and remember this. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. And every time I hear someone talk about how they think that the market's going to go down off of like an all-time high, it always that's skepticism. And what's so funny over the years I've been doing this is that I'm constantly taking in, people are like, oh, this year is going to go down because reason. This year is going to go down before this reason. And the reason the stock market actually goes down when it does is something that no one thought about. A global pandemic, housing crash. These are things that nobody expected. That's what makes them so bad. Or tariffs. Remember the tariff tantrum from yesteryear? Let's see. This is my ES from trading this week. It's very difficult to trade futures. I managed to eke out a little bit trading futures this week because it's just caught in a stupid range. So let's just clean all this up. And the last big dip we had was around this time, almost around this time last year for the Trump tariffs, Trump tariff tantrum. What's up, Single? Thank you. Thank you for the support. I put a lot of, I kind of forcefully work myself a little too hard on this because I want it to work. And so long hours, and it's honestly disappointing. It's both validating and disappointing that I'm able to trade better than something I made a bot. And then it's also, it's disappointing because I wanted to be able to deploy this and have it trade automatically, but we're not there yet. Got a couple more ideas though. I haven't actually taken this and deployed it to Forex. I haven't deployed it to crypto. It's just been stocks so far. And the problem I've run into is capital efficiency. But anyway, tariffs, putting a big giant tariff on every good that was coming into the United States was the last major dip. But you've noticed that there's been lots and lots of tariff news that haven't really moved the market in any kind of meaningful way. That's because the market's already been scared by it once and it's not scared anymore. So it's the media loves to put out these narratives about why the market's going to go down. Like that's what they do to sell ads in their, whatever it is, and social media now because it drives engagement. But the next thing that's going to actually dip the market is it's going to come from left field. Nobody's going to know why it happened until it happens, and then people are going to panic and they're going to say that, oh my God, the economy is going to crash, and typically doesn't. But you don't know what that's going to be, so no point in worrying about it. And I just want to kind of save you. Don't let me stop you from your trade that you want to express. But I think it's just until you see a real solid sign, like a false breakout to the upside. Basically, if we go up on the S&P 500 or Nasdaq, because you were wanting the QQQ, uh, I would say, actually, maybe I should stop talking uh, and actually look at the QQQ, because as soon as I brought this up, I do see a reason to short it. And yeah, so let me just stop riffing for a second. Basically, what you have is you do actually have, this is the NASDAQ futures, by the way. You got my classic setup looking for a 50% level, double top, followed by a move down right here. This was the week of start of February, and it came up and held this resistance right here. I'm not mad at you for taking a short on QQQ. Forget everything I said before this. All right. Market go down. Well, not all markets go down. I think what was a big disappointment this week was, of course, NVIDIA. NVIDIA was supposed to raise everything up, and it didn't. Actually, they had a like numbers wise, like making they made $63 billion or something like that off their data center. What was the what was it? Let me not speak out of off the cuff without knowing something. What were the headline numbers for NVIDIA? But what was actually interesting about NVIDIA, and we got to talk about it in the context of Bitcoin, because like this was kind of bizarre, sort of, not really, if you've been following things for a while. The thesis this has kind of come about that Bitcoin is trading like a high beta tech stock. Let me bring up uh, extended hours. So this was NVIDIA on the top, Bitcoin on the bottom, and this Wednesday when NVIDIA announced earnings, it followed in lockstep with Bitcoin. Look at that. So there's your earnings. There's your earnings top. There's your earnings top right there. And what that actually did was killed the momentum on Bitcoin. I posted on Discord that it was a little bit of an uh-oh, because it did a 30-minute spike trade, which actually just hit 3-to-1. But yeah, NVIDIA was the big disappointer for your NASDAQ, your tech stocks. Yes, I thought 68 billion in revenue, which is a record quarterly high for NVIDIA, but they were not able to push things any higher. WTF? I think it's because whenever you have something that is up so high as NVIDIA, or anything for that matter, there's really only this was what happened I remember this from Apple a couple of years ago. Apple was ripping, and people were buying it and expecting that earnings were going to blow it up and make it even higher. People were just buying calls left and right because Apple was Apple, right? And the important thing to understand is when something is up this much. When I say up this much on the weekly, NVIDIA is up from its 2022 low almost 1,300%. Okay. So when something is up this high and it's already way above its earnings per share, that 1980s metric that people used to use for valuations, there's only one way for it to go, and that's down. You can have this is the proof of that. So you have a record 68 billion quarter, EPS beat expectations, and AI demand driven data center revenue up 22%, up 75% year over year. And now you're down. Well, that's because it was all, as they say, it's already priced in. The only direction, basically everyone had bought it as if it was going to be beat. And the only thing that could happen is you either double the estimate or do something incredibly, incredibly crazy, or they fail to reach their estimates and it tanks horribly because it fails to meet expectations. There's only one direction, and that's down in the case like this. Um, I'm actually kind of surprised. I'm long NVIDIA from back in 2020, 2021 era. So I'm not going to sell it or get out of it. But somebody asked me if this is the time to short it. Honestly, the time to short NVIDIA has been since November when it did a false breakout here on the weekly. Basically came up, tried to break higher and slam back down the first week of November. So if you're asking me, is it time to short Nvidia? It's been time, honestly. I'm not. I'm just saying. Um, don't just because I don't do something doesn't mean I don't want people. I don't want people copy trading me because I'm fooled like anyone else with their biases. Case in point, we'll go through some of the interesting things this week. Netflix had, I think Netflix, this isn't earnings, but they decided to back out of their Warner Brothers deal. We've been talking about this on the live stream for weeks and weeks now. And I've said on Discord and on live stream, 75.27 is an objectively good level. And people have asked me constantly, Netflix. I'm like, do you like? I say, yes, 75.27 is a good level. I'm not buying it because they ruined the Witcher series. They got Henry Cavill to drop out of it because they basically relegated The Witcher to be a secondary character in his own damn show. I hope Netflix goes to zero. Doesn't mean that wasn't a good trade. I just didn't want to buy it because I am mad at them. Doesn't mean, and that's why you should never listen to me when I tell you I don't want something because I have bias against it. Okay. Actually made some people mad this week because I bought MicroStrategy. What? What? Yes. So Tuesday of this week, again, spikes. Spikes are not just in stocks, but anyway, spikes are the order of the day. Basically, price on MicroStrategy came down to 121.87, which is a 50% retracement from this bounce after their earnings. Made a nice clear range, and it spiked it there in the morning. By the morning, it came up, and I just had to take it. I had to put all my bias by being uh, a company that's basically ruining Bitcoin and going to zero. I still think that, and went long, and it worked out pretty well. And that kind of segues into the meme of the week, which is, you guys know who Jane Street is? I found this incredibly funny. Like this right here. So for those who don't know, Jane Street is a major quantitative hedge fund that is basically, they do all the things, make billions of dollars, and they don't have to report what they're doing because they're not a regular hedge fund, they're a quant hedge fund. But apparently, guys, did you guys know that the price of Bitcoin is not really 65K? The price of Bitcoin is really 150K, but it's manipulated. And to those people, I say, you can try to sell your Bitcoin for 150K, but I don't think anybody's going to buy it at that price. I mean, you can think it's worth that much. This has always kind of been it's cope. It's just straight cope. I agree with this guy right here. This is another this is a much better take than Roan 571,332. But there's just kind of sentiment. Sometimes I try to really separate the AI bots on Twitter from real people, but blaming market makers just cope for not having a stop loss. I've heard about the paper Bitcoin that FTX was selling, and how the high of 2021 should have been some price, but you know what? It wasn't. Look, the markets it's not fair. People have more money than you. Doesn't mean they're smarter than you. People with lots of money, institutions with lots of money and power blow up all the damn time. You know why? Because they're made of humans. I never blame or cope if I take a loss or something doesn't go my way because some shady, nefarious, big institution or whale worked against me. What are you going to do with that? Are you going to get better? Or are you just going to blame everybody for your losses and problems? Stupid. Don't do it. And so it's funny to me because when I saw it this week, I memed it. that Jane Street was now gone, because the implication then is that now that this nefarious this boogeyman has stopped suppressing the price, it can go up. It's over. The bottom's in. Well, that ended with a spike on Nvidia earnings on Wednesday, and well, that was the top of this very annoying range right here. And so yeah, I'm still going into the weekend inside this trade, because only because it held this technical level of 128 so well. Now we're going to see what happens over the weekend. If yeah, basically by Monday we'll know if we're holding this or not. But yeah, someone was like, I'm kind of mad at you because you've been talking so bad about Sailor with your Sailor derangement syndrome, and now you're gonna buy it. I was like, well, okay, guys, uh, when was I shorting it? Was when he went on CNBC and everyone was telling me it was an infinite money glitch that he had. Okay, that was November of 2020. Actually, I started before that. I'm always early, so I took some pain, and the summer of last year hurt really, really bad. But I held on and I got out early at about 200, way too early, but oh well. And now it's basically hanging out at another volume profile level from back in 2024. Basically, the 131 level is roughly where it is the bottom of this range here from, this period here. But you got to understand what I'm playing. At some point, let's just clean this up. Let me show you guys something about MicroStrategy. You guys, if you bear with me, guys, because you know what I'm about to show. If you guys watch this every week, hang on. Once you see it, you can't unsee it. You guys know what I'm talking about. Could not paste. Dude, killing my vibe here. Trading view. There we go. The anatomy of a bubble. You have your takeoff, your first sell-off, new paradigm, infinite money glitch, bull trap, return to normal. That's when I had to keep my account closed and not look at the P&L. And then now we're in despair. And so eventually what you're going to have is you are going to have potentially return to the mean. You just don't know where from. And this could be as good a time as any. Or it could go lower. But at some point, there's going to be this relief rally on Bitcoin and obviously MicroStrategy as well. And it's going to be very fast. It's going to be very volatile. And it's going to give, if you went long at the right time, a lot of profits. It also, hashtag not financial advice, gives people that are deeply underwater that have been asking me for a couple of weeks what to do with their positions they took on in 300s and above. It's going to give you a little bit of a chance there, but most people aren't going to take that chance. Most people are going to think that this is going to keep going up and they are going to be fine, and they will not, because it's just going to follow the same pattern as most things, and that is what I presume. I could be wrong though, but not about this. Let's see. So if you guys got symbols to look at, put them in the chat. We'll look at them in the last half. Oh yeah, we'll look at all those things. NVO, Mara, HIMS, AMD, MicroStrategy. Well, that's the MicroStrategy. Look, we are now long MicroStrategy. Sailor better do us some work. Otherwise, I'm not keeping it because I'm not married to that position like some people. So let's just go through the spikes I was talking about. So the small account that I started a couple of weeks ago to show off what I was doing, that's doing pretty well. It is. You guys hate the missed trades. I missed putting Dell in it. So Dell had some kind of earnings announcement here. We've been talking about Dell just about every live stream because of the weekly level that it's at. Let me take that short off. Hang on. So for the last several weeks, Dell has been hovering at a 50% retracement of the trend that started back in April of last year to the high from November. And it's also a nice little volume profile level here in this range, right? And so Wednesday of last week, the spike scanner fired, but I was not able to get it in my small account because I wanted to be extremely disciplined. And I had an order sitting at the median line right there, which that median line is 115.09 and the low there is 115.11. And so missed it. So it doesn't get to sit in there. And then you have this. Ain't that a bitch? Ain't that a bitch? But do have Dollar General, which I knew to be in because I've been in this since March of last year, targeting 164. So I would not have taken this if not for the scanner telling me, because I usually do not take something that's like looking like this. I just, it's very, very difficult for me to get in something that's been going up that much. AME is another one that came from the scanner. Picked it up on this is TradingView data, by the way, kind of sucks. This is actually a spike. You can see it with your eyes, but it doesn't quite fire this TradingView indicator, but it did on real data like Thinkorswim or Alpaca, which is what I'm using to pull data. And then the other one is Western Digital. It's kind of just hanging out, but it's still slightly profitable here, but there's another spike there. So those are the four. Those are the four from the scanner, but the scanner's found a lot more. Again, just the same thing in and out, just looking for those spikes, those little short-term volatility. Yeah, so that's working pretty good. Another spike that happened this week, silver. I noted this on Discord. Silver is not dead. It was looking a little weak, but again, did a little spike there at a volume profile level. It is, look at this shit. It is basically holding it has held very, very top, it's going to close above the lower, excuse me, it's going to close above the bearish 50% this week. It's going to retest the high. Silver bugs rejoice. Peter Schiff, big happy. Yeah, that's silver and gold are going to retest our highs now. They're not dead. When it held this, right? I'm not in it, by the way. I just don't care. I just don't care about silver and gold. I am remiss that I do not care. I just don't. Not that, I mean, yeah, I feel bad that I'm not making money on it, but I can't buy something this high. It's a character flaw as a trader. It's a character flaw, not being able to buy something when it's mooning. But that 50% retracement on silver was a good one. I think. See, that's the thing. Like, I was able to buy them on Dollar General because I'm already long Dollar General late into the trend. But this spike on silver could have been bought. I'm basically talking to myself right here because, yeah, I knew this thing was holding the 50% levels. Some good profit to be had in there. Could have even taken it up to that 50%. Yeah, that still would have been. It's right there at the 3-to-1 as well. Okay. Didn't take Netflix because I had a bias against it. Didn't take silver because I had a bias against buying something that's yeeting. I like pullbacks. I like to be, that's the problem is this. I like to be contrarian a little too much. I can't be doing what everybody else is doing. And that actually keeps me from making some money in these kind of cases. Oh, wow. Let's see here. What else to talk about? IBM. Yes. Okay. So IBM basically this week, biggest worst day since whatever year, 13% in a single day. I think that was the worst it's ever done in 20 years or something like that. Okay. After Anthropic, Claude, what I'm using for Openclaw, announces that they have now streamlined COBOL code. And if you don't know, COBOL is it's a language. I think it's a machine language, maybe. It's an old programming language. It's like ancient Sumerian hieroglyphics or something like that for what we use today with, Java, if you were comparing it to that, or Python. Okay. Python is what we use today. COBOL is like uh, ancient Sumerian, essentially, in terms of, just using an analogy here. Hate on me if you want, technical guys, but um, the only people you'll ever find that uh, use it or need it are like old IT guys, and they have very good jobs because they are one of the few people that are left in the world that understand and can work on these. And this is from like the 70s kind of deal. Okay, so this is old computers, but things that are working using factories and plants and industrial manufacturing, stuff like that still uses it. So someone has to go in and fix it when it messes up. Or anyway, then but they made this announcement, and it's in the sentiment of, if you guys have you guys heard this, which is uh so yeah, basically it came down where what this did essentially was pull this thing back to a major 50% level of this trend that began back in May of 2023. Perfect pickup. This is the pickup of the year for me, actually, because every year, every year, there is a meme, a market meme. This year is SaaS is dead, or the SaaS apocalypse. What every year, whether it's pot stocks or blockchain or oil companies are going the way of the dinosaur, there is some market meme that is driving a narrative either up or down. You guys remember when banks were going to fail back in 2023? That was another clear, obvious moment. TFC, one of my favorite banks for said purpose. Yeah, so May of 2023 was banks are going to fail narrative, because I think it was the Silicon Valley Bank and one other failed because of liquidity issues around, crypto and things like that. Um, Regional banks got hit really hard. Truist Financial is a regional bank. That was my pickup back then. ExxonMobil was my pickup in 2001. Again, I thought I was too late grabbing it back around 47.50 because it had already come off the bottom. I'm too late. See, even then I didn't want to buy something that was going up, but I did, and I thought I was crazy because everyone was sure that EV was going to take over, and we were not going to need gas anymore because everyone's going to be driving electrics within 5 years. How did that work out? So a lot of companies, like for instance Fiverr, feel kind of bad for them because the gig programming economy is just dead. That is dead. That's true. I'm not buying Fiverr because SaaS is dead. But companies like IBM that are highly diversified, that are not just about going to be replaced by AI that easily. Look, as I said, this is the whole topic of this live stream is I'm already finding that as a human, I'm trading still better than my bot can, even with all the work I've been putting into it. So I have now firsthand experience and knowledge that AI is not replacing humans yet. Skynet, if it came online, we could still beat it. Um, so given that, along with this narrative, which is just so persistent, I have to doubt it. I have to go against it. It's the only thing I can do. Like I said, contrarian to a fault, but then also contrarian to see that people are kind of overblowing the AI hype a little bit. I mean, there are some things that are, like I said, there's some things that are going to go down. The other one I'm looking at that didn't pull back is CrowdStrike. That's another one that's been hit really hard, but that I'm looking to pick up somewhere around 291. Yeah, let's say a little under 300. We're going to look for that. So that's the meme for this year. I coming in this year, I didn't know what I was going to buy. I didn't know what I was going to buy. Usually I start the year that way because I'm looking to see what's going to set up, what's going to be the narrative for this year. And SaaS is dead. Software as a service is dead. AI is going to kill everything. Is the meme. Shorting based upon that is too late. That's already happened. I'm not going to jump into that. Another thing to understand about the reason I CrowdStrike and IBM is on the weekly here. If we bring up Ichimoku, This is my quintessential go-to trend indicator. When price and momentum as a confirmation gets on the bearish side of the cloud, that is a bearish trend. CrowdStrike to come down, peg that level, and stay neutral rather than going full bearish. Same thing with IBM. Now, a few other things that might be a candidate that I said no to are things like Intuit. Intuit, of course, does QuickBooks, tax software. This is pretty, bleh, that's pretty, this also hit a major 50% going all the way back to 1997, if we want to go back that far, which is also a nice volume profile of, but I said no to it because it's already full on bearish. And also because, yeah, people are going to, you can do your taxes with AI pretty easily now. I don't know if everybody's going to, but people are going to start releasing tax preparation software much cheaper. That's pretty true. So this is where I do kind of go into there. That was a problem I had before I saw IBM this week, was understanding this, being working very closely with all the AI tools that are coming online, seeing how great they are at making me the person who can't program be able to develop things and build systems. That's true. That's going to replace a lot of jobs because now more people can do what used to be super smart people could only do, programmer people. That's true. And so I had a really hard time, squaring that circle. Like, okay, well, this is clearly true that it's going to kill some jobs from people, but how do I play that? And so finally, I found, like I said, IBM and CrowdStrike. IBM or CrowdStrike not yet, but IBM for sure, have gotten caught in the meme, and I think it's a little overblown for them. So that was how I was able to do that. Any interest in Microsoft? That's a good question. I had taken a trade on Microsoft back in before their earnings at 453. So that was again off of the 50% level. That was when I hit it back here in January and came up. And then as soon as earnings came out and it broke that low, I stopped out and I was out. And this is why you take your stops. This is why you have stops. No, no, I mean, it's again, going on that metric where I'm looking at like, what is the weekly trend doing? It could false breakout. There is an argument to be said that it came and touched the 384.44. If you went long here, I wouldn't be mad at you. But I need a little more. This is where I look for spikes. In other words, if I saw a spike trade that would set up on this one, it actually did have a very, very promising one. I don't know. Did this thing come up on the list? Hang on, let me look. Yeah, Dell definitely. Sheer Daddy, Dell. We talked about that at the very beginning. That is both a bittersweet thing because I was not able to grab it in my small account, but we've been talking about it for a while. Yeah, that Microsoft didn't show up as a spike. That's fine. It just didn't close above the Tinkinson right there, the median line. What would Nvidia have to do to get you to buy more? Come down 60% from the high. From the high. Like, understand, like, if you wait patiently enough, you're going to get a big discount. I mean, let's not forget that back in just 4 years ago, 4 years ago, Nvidia came off its high. And this is back when, people were still buying cards to mine crypto and AI was kind of on the horizon. Nvidia had a almost 68% haircut from its all-time high. I was waiting to pick up more Nvidia in this back in the tariff tantrum. It did pull back 43%. I was looking for at least 50%, or what I was looking for on Nvidia was a pullback to about 81, and it didn't quite get there. I'm not going to, if you can't get me to buy something like silver, if you can't get me to buy something that's meme worthy like that, I'm gonna wait on Nvidia for a while. So you get two options. Okay, now on Nvidia, it can either come back down to 111.50, or if you want to give it a try at 149.40, you can. Those are the two levels that I would look at. Definitely no sooner than that, because eventually it will. Like, go look at any tech stock. You know, Meta, which is doing great now. Meta had in from 2021 down to 2022 a 77% haircut. Just go back and look at charts of tech stocks, and you'll understand when you need to buy a tech stock. You can't go. You can't be messing around with you can't be messing around with tech stocks like at this point. No. At some point in the future, near or far, the market will cycle. It will cycle out of tech, and then tech will be just garbage, and everyone will hate it, and nobody want to buy it, and I won't get any questions about it on the stream here. And then you can be looking to buy tech. That's when you do it. Is down 10% from the high? Have some imagination. Facebook can't possibly go higher. LOL. Okay, so you remember that meme? Facebook can't possibly go lower. Yep. All right, let's see here. Yeah, so wealth management, some BTC review. Sure. Let's go through some of the symbols. Let's see. What else do I have to talk about? I did IBM, Silver, and Dell. Those are on my list. All right. So Bitcoin, for those that are curious, if we just clean it all up again, it's pretty obvious now that the bear cycle has begun. We're all in agreement now. Just to recap, though, as a teachable moment, when I talk about spikes, they are synonymous with false breakouts. The MicroStrategy trade on the 30-minute was essentially a false breakout. It's just that the spike indicator, by the way, if you want it, I will send it to you. Send me a message on Discord. Better yet, join my Discord. Click on the link in the description. Should be there. So whenever you have price set up some kind of a range, some kind of obvious price structure, and then you come down like this spike right here and slam back up, that is a false breakout. MicroStrategy failed to break lower, therefore it must go higher. Okay, false breakout. So Bitcoin on the weekly back in October, and I posted about this on October 7th. It was before the Trump tweet. It was before Knots versus Core went online. Everyone thinks that this bear market started on October the 10th on Bitcoin. No, it did not. If you were a student of price action, you would have seen that the week before, the last week of September, closed inside the prior all-time high from August. Okay. And then you also had another week, that second week of October, did the same thing. Two false breakouts in a row. When else have we seen that? Well, that was also prior to the tariff debacle. Another false breakout. When else have we seen it? Well, it was back in 2021. You had multiple false breakouts that happened in the fall of 2021 that started the bear cycle last time. So what do we have again here? We have a double false breakout that started the bear cycle. For those that don't think that you should look at price action, you are ignorant, as we say here in the South. Ignorant. You are ignoring something very, very important about how price behaves. Bitcoin is no exception. In fact, as much as I look at it, I've derived a lot of what I study and do from Bitcoin over these last decade plus. I've been trading and talking about it. Okay. So that being said, the high is in. Now, in every single bear market, it's gone down a lot. Off the cuff, the first one back in 2013-ish, down 95%. The next one was down about 85%. The next one was down 75%. So if we just assume that Bitcoin is getting less and less volatile, then we can just kind of spitball that this bear cycle at a minimum will be down how much? 65%. So what is 65% from the all-time high? 65% is about 43K. Do you guys remember what happened at 43K? So here was the election. We're basically back in the range of pre-election. Is Trump going to come in and make us the crypto capital of the world? Well, that's the level we're bouncing around right now. Key level 63 is the support, which is what it bounced off of this week. And what is fighting this week is 63K, basically banding around in between these two levels. These are the volume profile levels from this consolidation last time. Okay. That's what it's got to get out of. It's really, really just fighting these two levels. It's really cool. But I think it's going to go lower. Now, what we may have is a relief rally. Okay. That's very likely. Nothing's ever straight up or straight down. So what I'm looking for is a relief rally to probably about the 50% here at 79. That is what a relief rally is going to look like. And then we will see if price can break out to the bullish side of the daily Ichimoku cloud. And also we can get the momentum and we'll have a double confirmation. And then we can possibly be going up some more. But from here, I would say the next resistance that I'm looking for is 79. That's going to inform my MicroStrategy long. But if we break lower, then do you guys have the answer to my question? What happened at 42K? Does anybody remember? Long clear, this has been a bear cycle. Yeah. But we knew it, or we could have known it from the false breakout. I talk to people all the time that just don't want to. I don't know why I try to tell people things. I appreciate you guys hanging out and listening because you guys obviously want to learn these things, but Bitcoiners, they don't want to learn anything about price action. They just want to buy their one magic internet money and retire. Okay. What happened here? Who you guys know? I wish I had like little tokens to give out for people that have been paying attention in past live streams. What happened here in this little era of price action? I'll give you a hint. It was January of 2024. Those that said ETF launch, you are correct. The market hunts for pain. It's hunting to make a headline. ETF buyers now in the red. And it's basically the minimum amount that you would expect out of this bear cycle. I'm not even saying that it's going to go down what it did the last bear cycle. It's going to go down less probably than the last bear cycle. But everything kind of confluences to this lower 40 price, which would be the most ironic and therefore I think the most likely. So I think though at some point, just because nothing's ever up or down, we're going to have a relief rally. And then we'll eventually come at 42K and then I get interested. The thing about sentiment that I've noticed is, and this is very interesting. Actually, let me bring this up real quick. So I talked about this earlier this week. I was actually going to make an independent video about it. Let me see if I can find it. Hold on a second. I may need to make an independent video about it, actually. Talk a lot. So a lot of the people I talked to going back in, I'll find it later. When we were up in these prices up here, or really up in these prices around 100K, people were just kind of bored and very frustrated that Bitcoin wasn't going fast enough for them. I remember talking to somebody that said he needed to do some house renovations and he needed Bitcoin to go quickly because he needed to do them. I said, well, what are you talking about? Like, it's like, well, I need to be 250K, like, here in a couple months because I got to do a house renovation. I want to sell like one Bitcoin and, pay for the renovation essentially. And I was like, the market's not any kind of obligation to adhere to what your renovation schedule is. But that's just one anecdote. But people were just looking for 1 million. And instead, all the king's horses, all the king's men, got you up to 126K. You had ETFs, you had institutions, you had MicroStrategy, you had Donald Trump, all pushing you up, and it was worth 126K. And that was not satisfying to people. Now, what I hear when I talk to people sentiment wise, I read on Twitter, just non AI, is this is not really, people aren't really fearful here. People are seeing this as a buying opportunity. People have started their DCAs. People are telling other people to start their DCAs. The mantra, the sentiment now is one of FOMO, actually, fear of missing the bottom. Don't look for the bottom. Don't look for the bottom. That you'll miss it. Don't miss the bottom. Start buying now, today. That's not despair. That's not capitulation. That's hope, but it's also not a bottom. When people either don't want to buy or can't buy because of major liquidity issues, either in the market or in their lives, unfortunately, that is when things really bottom. So that's my read on it. And I asked my little bot friend to tell me. Let me pull that up. What are some of the analogs to that in history? Hold on, let's see here. Me. So the two corollaries. Okay. So want to know what is the biggest corollary to this? So the Japanese Nikkei from 1989 to 1995. So a lot of the 1980s bull run, happened in both American stocks and in Japan, obviously. A lot of people felt like they couldn't buy into it. And so basically, let's see if we can pull this up on a chart. I like to talk from charts. How far back can we go? Look up our indicators. Nope, that's not far enough. Nikkei, let's do indices. We go back to the 80s. No, we cannot. Let's see. Nope, not there. Nikkei. Let's see. Nikkei. Economy. Okay, here we go. Okay, yeah, there we go. Now we can see it. All right. So the Japanese Nikkei, basically people, let me bring this up. Read the narrative here. So this was a big bubble in Japan. Japanese stocks, Japanese everything. This is when they were basically the China. They were building all the tech stuff. People thought that Japan was going to take over the world, where they failed in the 1940s. Now, 40 years later, they're going to take over through technology. And everyone thought when it pulled back, look at that 50% retracement. Look at that, guys. Look at that 50% retracement there. Back in, this is on a monthly, by the way. So back around 1990, it pulled back, and a lot of people started buying it because they had missed out on the big bull run. And Japan was so powerful, they can't fail. So a lot of people started buying that, and then this is where you enter into that, what I talk about, guys, the valley of risk, especially when you came back and you tested that 50% from the upside. And essentially, Japan from 1990 all the way to 2012 entered a lost decade. People felt like they had missed this run up, and they started buying into it. But that's just Japan. That's just stocks. That's real estate. That's a country. That's not anything related to Bitcoin. I know. For that, we need to look at gold. And gold, how far back can we go on gold? Gold, back in also the early 90s, did the same thing, where a lot of people saw it go up and they felt like they had missed it. And so they bought and held gold as well because, it's sound money. Gold, big fear, everything. And gold entered a lost 2 decades. Everybody's Peter Schiff's doing his victory laps now, but same thing happened. Well, not the exact same thing, but 40 years ago, big parabolic movement. And when it pulls back, did I also respect the 50%? Yes, it did. Pulls back, hits that 50% level, breaks below it, hits it again from the upside and down. You guys remember silver? Just saying, 50%. If this fails to break the all-time high as it did here, it's over. It's over. Not there yet. But the two things these have in common are everyone was convinced, everyone, quote unquote, that they had missed the big run up and now they needed to get in. And instead of being rewarded for their faith and diligence, they were ended up getting ground down for more than a decade, holding on to this asset. Now, eventually, a generation or two later, they were rewarded, but that's a long time. These are just cautionary tales, not telling you to do or not do anything, just giving you two analogs to the kind of sentiment that I see in Bitcoin now, where I'm just going to leave it at that. Max out 0% credit cards or misused car loans for the real bottom. Yes. I've seen some people on Twitter talking about they've taken out credit card, cash advances, things like that to buy Bitcoin over the last cycle. I mean, those kind of things they're almost a guarantee they don't get rewarded. Not even almost. They always fail because it's the thing is they can work for a little while, but the problem is they don't keep working. And as long as something works, it's like when I talk to traders and they have a great trade and they make a lot of money, and I tell them, best maybe possibly you're not going to listen to me. The worst thing that could have happened to you is you won on this trade because you taught yourself bad habits, which are going to guarantee that you keep doing stupid stuff until you lose the money that you made. So the best thing that can happen to you as a trader is to lose money, because then you learn. If you win and you were right, you can think that it's because you're a genius. That's the worst thing. But maybe it doesn't. Maybe you were just lucky. Maybe you were right for the wrong reasons. So, all right, let's catch up on things for the symbols. All right. Oh, shoot. Was I I was not showing. I thought I forgot to do the video on Discord this whole time. It's just me, guys. I don't have a tech guy to look out for stuff. All right, let's see. Let's go back to Hoist, man. Let's see. Look at so hymns. People have been asking about. Look, it hit a level at 16, 17 here. And I think it had earnings, and look, that's 16, 17. It's now functioning as a resistance. Not in. I mean, you talk to me when we get down to 874. That's the next level, volume profile level. But IBM was my pick this week because you have a strong company that's been around for 100 years, and it's already in a bullish trend, and it pulled back to a level. These kind of things are almost like, they're like lottery tickets, okay? I mean, yeah, you could maybe try to get them back up, and I'm not opposed to buying something that's down a bunch like Dollar General when it hit the volume profile, but I waited until it looked like this. It hit a volume profile level. I had a spike in it, and then I went because the spike happened on Dollar General, it happened to hold that volume profile level. Hims, on the other hand, is not holding that level 16, 17. In fact, it's coming down to test it as upside resistance. So yeah. So it's up now. So now it's there. All right, let's see here. NVO. So they lost a lawsuit, I believe, about their drug, about their obesity drug. And I'm looking because people have been asking about it. Again, I've got it annotated for the live stream. It was not holding this level at 5202. Did not want it. I'm going to look for it to come down to 27s, 27.43 or 27 or 24.73. So ask me then. Marathon. It's just going to be a Bitcoin proxy. I will get interested on Bitcoin stuff at 42K, 43, 42K. That's when I get interested. And again, 944, the volume profile level, came down to hold it back in December. And just like Hims, has come back to hold it as resistance. Not a buyer. Not a buyer of that. AMD. I bet AMD did pretty well this week. No, they didn't. Interesting. So 50% retracement, that's a double top. You've got a gap that's going to get filled probably 171. Yeah, I'm like this 171.78 because you've got a nice gap level here for it to come up to. Yeah, that's what I like. I like there. All right, let's see. What else? What else? MicroStrategy. What is BMNR? Where I looked at MicroStrategy. BMNR, as I said, anything Bitcoin not touched until 42K. XMR, my favorite. Hanging out at its volume profile level, 324.86. Monero is the only cryptocurrency I really care about. Bitcoin, I do because Bitcoin is Bitcoin. So I know it's a redundant tautology, but Monero is actual internet money. It's private by default. People on the dark web use it to buy stuff. It's actually used as money. And what you see in these kind of cases are allegedly people switching Bitcoin to Monero, using Monero as an anonymizing service. But Monero actually has a lot of, it doesn't have enough liquidity to support big transactions like that, hundreds of millions of dollars allegedly. But when it does, people come in and they change it and they drive the price up, big giant yeet. But aside from that, if you zoom out, as they say, zoom out, bro, and you look at Monero going back to its inception around 2014, if you just kind of take a step back and don't expect to YOLO your gains, except maybe once every few years when it does something like this, it has the best looking chart of all crypto. Slow and steady appreciation and adoption. If you just take that as a baseline, separated by yeets. And if you compare Monero to Bitcoin, actually, I did this the other day. Where is that? Hold on. Essentially, since the December. Let me find it. I posted this the other day. Yep, there we go. So since the October 10th, the bear market began, This is some of the top 15 cryptos. This is XMR BTC is up over Bitcoin 79%. I think TRX is Tron, Shibu Inu, XMR or XRP. Yeah, Ethereum down 16% versus Bitcoin. So as far as being a store of value, even with this drop off it's had since this all-time high or about 800, it's still beating Bitcoin in this bear cycle, as it did during the 2021 bear cycle. Yeah, so this was the 2022 bear cycle. And then, of course, this is the 2026 bear cycle of XMR BTC. So still like Monero, very much. Very much. All right, so let's see. How much? Oh, you asked a question. How much costs your Openclaw trading bot? I usually get close to maxing out my $200 a month subscription. All right, let's see. We talked about Dell, talked about Microsoft, talked about everything. So I think we covered all the bases. Anything else, guys, you want to talk about? What I'm going to do is I'm going to continue working on my bot. I'm going to continue working on my scanner. Right now, let's see, you are free to use it to look for spike opportunities, but you need to use the discretion. Look for them as stocks that you want to buy already. Hopefully, I've explained what they are. They're basically finding false breakouts on a 30-minute open. Eventually, this scanner, I'm hoping to turn it into a suite of tools because now I can develop them. But I've been really focusing on getting this down. I've got another breakout strategy that I've been testing, doing your standard back test stuff on them. So hoping to get that off the ground pretty soon. But keep checking back. Not. Thanks for hanging out with me this Friday. Hope you guys have a good weekend, and we'll see you next week. Bye-bye. Oh, how often does it run? Yes, once a day, 10 a.m. This is just the first of many tools. So have a good weekend, guys. See you, Mark.